The main thing that we want to focus on our conversation today is about our KYC.com solution, which was introduced to, I think, some of you last year. We want to give you an update on that. And through that, to touch upon some of the themes that we have been discussing through the session today in terms of how we're integrating process and technology and analytics in bringing together very, very innovative, interesting solutions to the industry. We're looking at how we're using technologies like our cloud technologies to actually make that happen, allow the banks to change the way in which they're doing things and reduce their overall cost of doing that. We are, hopefully through the session, you'll get a sense of at least one example where we see the banks going through a very, very significant change in their, in the way in which they are going about their business. To set some context, and some of you may already be very familiar with this, so I won't take too much time. The capital markets industry is going through significant amount of change. There's a significant amount of soul searching. They're trying to find the new business model that's going to be sustainable for them over the long run. It's driven by pressures on revenue, pressures on cost, pressures of capital adequacy, regulatory scrutiny. All of these things, and Monty alluded to that earlier, are making the banks go through this significant amount of change internally, or searching for ways in which they can change. One of the areas that is, we think, very, very opportune at this point in time, very, very, in a ripe state for this kind of total disruption is this entire client onboarding space. It's extremely important for the banks, both from a revenue opportunity as well as from a cost management opportunity, because it's being done in sort of an age-old fashion at this point in time. It's come under tremendous regulatory scrutiny. The costs of not doing this well are very, very high because the banks don't have reliable data. Their ability to predict what the risk exposures are for to each of their customers and counterparties is very hard for them to predict, very hard for them to know at any point in time. It's extremely fragmented because the banks have grown through acquisitions over a period of time. So this function is actually split across the bank in many, many different places, very siloed. And as a result, lots of lost opportunities in terms of knowing what to cross-sell, what exposure they have with clients, et cetera, et cetera. So Gary, one of the questions from the industry's point of view, what do you see as the key things the banks need to do in order to get out of the situation they are in at this point?
Yeah, thanks, Rampi. I think it's Monty was talking earlier around that sort of slope of margin decline, and that's something that's really sort of got the banks very much thinking about the traditional ways we've tackled this in the past. So I've worked in the onboarding space for the last about 18 years. We've looked at automation, we've put in process improvements, we've thrown headcount at it, invested a lot in this space. And the onboarding side, with credit, with legal documentations, with KYC, with account opening, is a very fragmented, and that sort of challenge around actually ratcheting up, trying to meet regulatory demand is making it very hard. And that's why we've had to be a lot more sort of fundamental on how we've tackled this. Where we're trying to get to as financial services is really looking at the whole client experience. The clients are asking us, you've got information on us around our legal side, why are you not using that for our tax work, etc. So how do we have a much more integrated model? How do we have less touch points with the client and actually have a better quality of service? So that's really driven us to think about the process in a much more fundamental way, and hence the emergence of utilities over the last couple of years is the key challenge for us. And I think that the most important one, it's close to my heart, obviously working in KYC, is around KYC. And I guess, Rampi, what's your view on what can be done in the KYC space?
Sure. So, just to make sure everybody's on the same page, KYC is know your customer, and it is a process that every bank has to do with every one of their customer relationships. They need it not only for their own internal reasons, but also because the regulators are extremely particular about the banks not being used by need to know whose money they are dealing with, essentially, right? So the money is not tainted, etc. So it's all part of the entire anti-money laundering landscape that the regulators are putting in place. It's an extremely complex problem. It requires a lot of documents to be reviewed. It requires people who can apply judgment to the content of those documents. The relevant content of the documents need to be translated into data, so the data needs to be managed. And because of the complication that I spoke about earlier in terms of the fragmented process, siloed, data architecture and all of that, it's very difficult today for the banks to have a really reliable single, process that the regulator that stands up to the scrutiny of the regulators. The other challenge that the banks have today is that the regulators have set their expectations, but individual banks have to interpret that and apply their own policies on what needs to be done, what data needs to be looked at, what passes muster, what doesn't pass muster, etc. And as a result, the counterparties that they work with, the clients that they work with, have to deal with different needs because of different interpretations from different banks. And so the counterparty is having to give a set of documents, and 6 months later or 3 months later have to give a different set of documents to a different bank because counterparties work with multiple banks. And that's extremely frustrating for the clients of these banks, and it's one of the single biggest pain points in the entire client onboarding process. Another point is that this is not just a one-time activity. This is something that has to be done over and over again, sometimes every year, sometimes every 2 years. But therefore the counterparties have to go through this process multiple times. And some counterparties may have 20 bank relationships, so you can imagine the pain that they go through. So if you had this conversation with the banks, and Genpact has done a lot of bilateral single bank relationship process and technology work in this space over the last several years. About 3 or 4 years ago, if you had conversation with the banks, they would always say that this is something that's, it's a risk management function, it's very core to our, this thing, we have to do it ourselves, we can't trust anybody else to do this. We've seen a significant evolution in the way in the bank's thinking, and part of that evolution is because we have been able to separate out the risk management decisioning functions from the data and document management functions. And we've been able to explain to the banks and say that, look, you still need to make sure that you are making your choices based on your risk models about who you'll do business with and how much business you'll do with that customer. But the documents and data that you deal with and all of the pain that you have to go through, collect that and manage that and make sure it's valid and make sure it's being done correctly, there's no reason why you have to do it. The second point is that because the same profile is shareable across many different banks, today individual banks have to invest in all of the process and technology. If you can sort of reuse that profile across multiple banks, it's possible to have significant. So we tried to sort of make that argument with the banks, and we're seeing that a whole evolution in their thinking that this is something that can actually be done elsewhere. Given that background, Gary, what do you see as a significant value that the industry will get out of this kind of a common shared solution, you think?
Yeah, I think it says the right-hand bottom box there is actually, as you were saying, if you look at HSBC and the headlines in the past, and there's headlines around a number of banks actually going into the client due diligence space and looking at utility, kind of feels at the outset quite counterintuitive. But as you say, if you're able to strip out the risk management, decision making, enhanced due diligence, it's still retained within HSBC. But actually a lot of the process is actually non-proprietary. And actually if we work together with other banks and the industry, we can actually create something that's bigger than just something as a whole is much greater than sort of doing it individually. So that's really what we've seen in what we've been creating. And it's not just KYC, we've very much things like tax, documentation. Monty was talking about vendors. This is sort of the beginning, we believe, of the industry changing around looking at that elements of a process which can be pulled and pulling together best practice and done in a better way. And certainly if just flipping on to the next slide, we've been we're working with a number of the other banks in terms of bringing together this utility. I've been quite refreshed in terms of in the financial services industry, working with other banks. We've picked a good mix in terms of geographic coverage, product coverage, working with our other design partners and coming up with something that we feel is leading the industry transformation. There's other utilities being established. I think what we feel is that the high standard that we're putting together is something that is very strong. It's something that the clients, as I speak to clients of the bank, who are very excited by this, because obviously it helps. They're a one-touch in terms of providing information for KYC. So that client experience and the cost and able to come up with an industry standard is positive. You mentioned the regulators. Yes. I've spoken to a number of the regulators, both in the UK and in the US. They're also excited by it. They see this as a positive, I think, for a number of reasons. Number one, if you have an industry standard around documentation and KYC, it's much easier then to affect change. So if you're wanting to change regulation, if you want to impact it, there's much more. You don't have to go to banks individually. You can influence it through the utility. And secondly, if we look at maybe some tier 2 and tier 3 banks, actually the cost of investment to raise the standard with KYC is quite difficult. So actually having a utility which they can leverage, designed by ourselves with the other design partners, gives them a leg up to try and reach that standard much quicker than if they were doing it themselves. So that's certainly a key part of what we're trying to achieve. So I guess we've been working together for nearly 2 years.
That's right.
Rampi. What do you see the benefits, and what have we been doing in that period from your perspective?
Sure. So, like to talk about, 3 or 4 different areas in which we've sort of made significant progress since the last time we reported to this group. So I think the place where I'd like to start first is the fact that we put this whole partnership together and actually made it work. The 3 things, if you look at the bottom left of that slide there, there are 3 significant components of this partnership, each of which brings very, very different kind of value. The design partner banks, and we named 4, actually 6 of them, 2 of them joined a little bit later, who have, and this was the big question for us, 18 months ago. Will the banks actually be able to collaborate? Will they actually be able to share what till then had been held very close to the chest, as something that was private, proprietary, their secret sauce? And it's been tremendous, the experience in the last 18 months of how the banks have come together. They've shared, they have, said, what kind of, compliance policy decisions are being made internally. And what that's allowed us to do is to actually pick, the best practices across all of these different banks. And the banks are quite different, actually. So, there are a couple of very US-oriented banks, a couple of very European and Asia-oriented banks, and, the considerations sometimes are a little bit different, but we're able to sort of pick the best of the breed across all of that and roll that into, our standard. Market and Genpact have also, used this time to build that whole collaboration and partnership. The joint venture, as you know, is, it's a 50-50 joint venture between Market and Genpact. And that is something that, has also played out very well over the last 18 months or so. The second thing that we have been able to achieve, through this whole process is the standardization of the policy. What is the right kind of KYC due diligence that is required for, a corporate versus investment manager versus a hedge fund versus a trust? And that kind of standardization of policy is being done for the first time in the industry. And we think that this, as usage increases over the next year or so, is well poised to be the de facto standard for the industry. And we think it's going to force everybody to actually sort of adopt some form of it, if not actually come on board with us. And along with that, the standardization of the process also. So which sources do you go to? What documents do you look at? What attributes are required to be completed in order to understand that this is a complete profile? And depending upon the entity type, we've between 150 attributes and 200 attributes in order to say that, yes, we have done a complete due diligence of this particular entity. How frequently do we do it? So our standard is that we do it at least every 12 months. Individual banks may subscribe to it every 12 months, or once in 24 months, or once 36 months, depending upon how they view that particular counterparty's risk profile. But we don't make any such judgments, we just do it every year. And then the third thing is that we built this whole cloud-based platform, which really is the secret sauce over here. So it's taken all that policy, all of that process, put it into this whole workflow solution, created the portal that the contributors, which are those counterparties, can come in and through some kind of self-service mechanism actually submit the documents that they want submitted. It reduces the amount of actual chasing up and hand-holding and follow-ups that need to happen in order for the documents to be done. So that whole cost element that the banks have to deal with significantly going down. And then as far as the subscribing banks are concerned, there's a single well-defined profile that they can subscribe to whenever they want. And and then there's a well-defined SLAs for by how quickly, once they ask for it, it'll be provided to them, et cetera, et cetera. So that's the kind of progress that we made. There's been some validation of our thinking. We've had 8 of the top G14 banks, as they're called, signed up, committed to us, going through early stage implementation at this point in time. We had 5 of the top 10 investment managers committed to us to submit, to contribute documents and contribute their legal entities to us. We have about 2,000 other entities who have, some of them on their own, sort of registered with us and said that we want to be part of this, and please tell us what documents you need from us, etc. So there has been significant validation of this model across geographies. We focused on the US and UK to start with, but this year we will focus also in the rest of, in other parts of Europe, in Canada, and then also in Hong Kong, Singapore, Australia. So there is going to be a global coverage. So in 3 years we will be covering most of the legal regulatory jurisdictions in the world. And domicile locations of counterparties and languages and all of that. So we have made tremendous progress in that regard. Given all of that, Gary, yes, please go ahead.
Yeah, you've described how much easier it is to draw information into HSBC, but do you report out to the utility information on the activities your clients have had with you? And if so, most banks, yourself included, I believe, are highly siloed. So A, have you had to change your own infrastructure to report out? And B, is it a burden reporting out to what's essentially a third party?
Right. You want to take that?
Yeah, so our infrastructure is, we're continuing to develop it to make consuming the portal information, KYC, to come much easier. So that's very much in flight. In terms of reporting out, the process hasn't changed end to end as such. So, we still have the relationship manager who will make decisions around, is this client fitting our risk appetite? Do we want to do business with that client or its products? So that very much sits still within the bank institutions. What we've done is taking a large part of the operation ability and put it into the utility. So actually the reporting, the process that goes through it, just part of that process is done through the utility. So the reporting out is in terms of KPIs, in terms of what happens around triggers, around notifying regulators, etc., still stays within the current infrastructure that we've got. It's just we're able to take a chunk of the process and be able to put it into the utility, which, to be honest, that helps us. And one of the benefits you see here on the slide is actually as bankers, what they're paid for is to make money and make the right decisions about what they're doing, and actually focusing them on doing that rather than running a big process is how we see the benefit. So let's run the operations through the utility, more and more, as we get comfortable with the standard, which we are, we drive that side, then the risk appetite within each financial institution is different, and that's where the decision making very much comes in.
If you can just add one small point to that. So the entire AML process within the bank has two parts to it. One is the profiling of the legal entity that they're doing business with, the counterparty that they're doing business with. And the other is all of the trading and transactional data that they have access to, their history with that particular client, so to speak. Now, the bank puts both of those together to make its sort of risk decisions about that particular counterparty. Now, our focus is on the first part of that, not on the transaction data only, and therefore there is very little that we are expecting back from the bank in order to, because all our source of data is either public sources or the counterparty themselves. And we are not beholden to anybody else. We are not making any risk evaluations or judgments. We are just reporting it as we see it, that's all. Any other questions so far? So, you know, from the point of view of the experience that you've had, Gary, with the service so far, right? We've gone live. Banks are actually sort of consuming these profiles today. Could you talk a little bit about that in terms of what the experience has been and what you see as the value so far?
So we went live with the utility just the end of last year, December of 2014. We're going through, as Rampi said, we're live in the UK and the US, so we're looking at clients that are coming up for periodic refresh. So we look at the KYC depending on their risk basis. So going through that, been very impressed with what we've been seeing. You know, speaking to regulators, speaking to clients, speaking internally within the bank, very excited at what we've created. It is industry leading. It is something completely that has taken the industry, you know, across the industry by storm. I think a lot of the future of what we do within banking is very much in this space. I went to Bangalore a couple of times over the last 6 months and met with the team, both the operations team and also the outreach team, also in New York. I've been very impressed by what we've created with Market and Genpact. You know, I was very keen in terms of our relationship with Genpact is very strong. As an operations person, I'm very keen, and my expertise is really around that sort of training, the quality, and the profiles now we've got back from the utility and able to use them within our operations has been very high. And that focus on training, quality, you know, the regulators are very interested in what we're doing around quality, around how we source information, how we check it, etc. And that is very much the high standard we have set is something that we've seen in practice now with Genpact, Market Genpact as a utility. So I'm very excited by it. There's lots of overlaps. You know, we're doing this for KYC. I also look after FATCA and CRS from a tax perspective, and the sort of duplication with that domain is very close. And I think this is very much going to dominate, you know, how we go forward in that. So I've been very impressed, very excited about what we've done in this industry space.
Yeah, I think it's very, it truly is transformative. I think what we're seeing out here. Early stages yet, though. Somebody had a question? Yes, please. Sorry.
Could you typify the four design members that started? What % of the volume of KYC that you expect to have is already in the system?
So I think we're very at the early stage, I'd say, of you know, of the whole implementation process with these banks. As you can imagine, the process of internal change within the banks is still, you know, quite a significant journey that we have to go through. Some banks see this as a data subscription problem. It's a simpler implementation challenge over there. Other banks see this as an entire process outsourcing a problem, in which case it's a much more complex internal change that they have to go through. Between the 6 design partner banks that we have over here, we will have roughly about 50 to 60% of the entire volume that we will need to do to meet our financial goals over the next 5 years. We are still at a very, very sort of low volume at this point in time. So we are, just going through, the initial stages of, outreach within the banks, outreach to their customers, the initial set of customers of going through the process. So that's really, and not every bank is at the same point. HSBC is one of the earlier, go live partners.
Mm-hmm. But I very much echo that. This is unprecedented. There's no history of this, so we're very much looking at, the process, the clients we're speaking to, the regulators that we've engaged with internally. As Rampi said, I think this is a take out of 50-60% of what we do, that element of the KYC process is kind of, that's the target we want to hit over the next couple of years. Any other questions?
From the perception of the bank, do you see it as, I know not perfectly, but partially becoming static after it matures in a year or two? Or do you have some roadmap of continuous development, beyond, if you will, merely adapting to the latest regulatory change?
Yeah. So,
do you want to take?
Go ahead, then I'll add to that.
So very much so. I think on the earlier slide, we see this as very much strategically the way forward in terms of, if you think about the onboarding process, which I operate, there's a number of elements of that which again lend themselves to non-proprietary utility side, which actually banks are not best placed to do. They need to be focusing on the decision-making side. So if you think about legal documentation, if you think about the account side, you look at the credit element, tax classification, all the various things coming down the pipe, all of them lend themselves, an element to them, to utilitization and leaving the banks very much to be the decision point around that. And the benefits of pulling together the best ideas across a number of banks, you get to a sort of good industry benchmark that enables you to move forward from that, rather than trying to individually try and come up with it yourself. We all respond differently to those pressures. So strategically, we think it's very much the way forward, and that's just in the onboarding space, and I'm not sure there's other areas.
Just to add to that, just from KYC.com point of view, we see opportunity. So right now, the process is still a highly manual process. We have the technology platform, we have the workflow, we got the data management, all of that, those pieces. But it's still a very person's judgment based kind of solution at this point in time. As we are seeing the transactions go through the system, we're seeing opportunities for, one, increased automation of data collection. So for example, as we go in and source data from public data sources, we're increasing the level of automation of that, so you don't need people actually going in and looking at all of these registry websites and all of that, so we're able to automate. That's one part of it. The second thing is, as we look at all of these documents that are coming in from the counterparties, and these documents could be as varied as articles of incorporation through individual passports, and so there's a whole range of things over there. We are looking for and looking at ways to increase the automated digitization and intelligent OCR of those. So again, we can sort of improve the amount of non-people involvement in that. There will still be elements. I mean, this is, as I said earlier, very, very complex process. Judgment is required. So we still need people to apply that judgment, I think. I don't think we can get away from that, at least in the near term. And the third piece, I think, is that there's significant amount of analytics opportunity for us as the volume of transactions increases and the amount of data that we have in the system in terms of predicting reliability of sources, combination of things that that we can use to flag stuff to the banks. So we have some ideas on that. We haven't yet implemented any of those, but we're seeing the ability to do that over a period of time. So those are some of the things that we're sort of playing around with at this point. Yes, sure, please.
What type of liability does the banks expect Genpact to share?
So the liability is very much sits within the risk decision, sits within the bank. It's outsourcing a part of the process, but still owns the end-to-end process. So that very much stays within. Obviously, we've got service level agreements with the utility, but actually the decision making around KYC very much sits with the risk decision maker, i.e. the bank.
Yeah. So, we have, as Gary mentioned, very stringent SLAs in terms of quality and throughput and all of that. We have instituted a number of different checkpoints, quality checkpoints, and there's a tremendous amount of traceability. So any single data element in the profile, you can map to a document, a particular paragraph in that document. So any third party can go in and see, where that particular data attribute has been sourced from. And there is a quality assurance function that banks will retain in the long term. That's not going to go away. It may move to a more statistical kind of sampling-based quality assurance over a period of time, hopefully, but that will continue to be there. So while we have an SLA responsibility, there is very limited liability responsibility that the service has to the banks.
So even if the bank's decision was based on something that was an error in judgment on the Genpact person, there's not a liability?
As long as it's a judgment based on a standardized policy that it's the way the bank works today. There's no difference. So,
Oh, understood.
Yeah.
So, understood.
If that's the driver, if they regularly say somebody else take the risk and judgment, we'll have a different problem in this country. So, I think that's the basic driver of the.
Yeah. Well, just because they bear the risk is no reason why after they bear it, they don't want to come back to you and get a little bit back. So,
It's a chicken and egg, because if that gets done, the regulator gets worried that you're actually transferring risk.
Yeah.
So that's the chicken and egg.
All right.
Okay.
Thanks very much.
Thanks
Appreciate
very much
it.
for your time. Thank you.